All right. Good morning, folks. We're just waking up. Just waking up, and man, I briefly grazed at the charts. It was still at 19 something, and I was like, damn, uh, I might have to get a short in. And I swear, not 10 seconds after those words uttered out of my mouth, this little move happened, which no big deal. We'll get the next one if I'm awake for it or even care to judge, do it. What a descent. Let me get my coffee. Hang on. Alrighty. We could learn a lot from Evil Pimp right now. We not here to fall in love. We are not in love with this shit. And if you are, then you have pain coming. Pain. Man, it's never before seen. Never before seen. Not even one, but two. If you don't know, who do you think controls the markets? We control the markets. The market controls the market, bro. The market controls the market. There is no one single entity besides Chinese. If there is an answer, it's the Chinese. But the market controls the market. It can only hold up for so long under these conditions. Things look terrible for too long into the future. I'm willing to bet the Dixie is still going up. The Dixie looks stronger and harder than it's ever looked in since 40 years. 40 years. 40 years. Let's take a look. Yep, there it is. When the flow of cash is this high, it has not been this high since 1981. From that moment, it went up 50%. I see no reason why it would not be the same here. This should continue to go up. Yeah, man. Yeah, it's weird. 40 years. It's been a slow descent. The cheese are in control. I mean, what else is there to say? You know, like I said, who would want to, who's gonna step up and take on so much risk for no reason? The money flow hasn't even dipped really deep red yet like it has before. This is big though, man. Now, it is a fresh candle. Fresh candle, fresh yellow X. That's not really good. I mean, it's, you know, it's a fresh one. We'll see if it sticks. It's the weekend. Sea freight transportation stocks collapsing. Yeah. How much lower can it go? Well, I'll take this shit up. Stupid ass log. It can go pretty low. Pretty low, amigo. Why are the spider lines messed up? I don't know that they are. Are they? Whoops. They look fine to me. We just don't have any drawn back here that have been saved. But it's a good time to do it. Let's do it. Theme of the night. Don't be in love with this shit. Aced that one. Damn. Ooh. Is that what this is? 17.5? 18.5. We don't love this crypto. We don't love this shit, man. Yeah, it makes sense because it's similar to when it's almost like we're floating in uncharted territory, although it is charted. but it's got that same feeling, man. It's like just this dark space. Space sucks, man. It sucks for human beings. It's a very dangerous, a very cold place. The screen is not black, bro. Space. What would the bottom be? Man, my guess, if it really gets bad, let's see where this ends up. I would guess the worst that it gets is at the top of the original 20K pendulum. That would only be it would make sense for the balance, just like a seesaw. What goes up, it's, you know, however much it goes up, it's got to come down a lot too, man. I'm not saying it's gonna happen, I'm just saying. Now, I will say this, that the yellow X's, all of Market Cipher was mainly designed around the 1 hour. It's just a Viagra effect that it happens to work on many time frames. But no matter what time frame, when the second yellow X is typically followed by the strongest move. Most of the time. Yes, I know this isn't the top. I know this isn't the top right here. There's an 18 bear signal on the dual band strength index. Golly. It's the third time it's tapped. One could argue there's a quasi head and shoulders somewhere in here. Yeah, this could be rough. Rough. The dogs are barking. The doggies are barking. Break into the next channel lower and then whoop-de-doo, whatever it do for however long time goes by. There's certainly no hope for a bull run or a bull cycle in sight. World has to get out of some shittiness. There is no why. There is no why. There doesn't have to be a why. It just is. In fact, the big drops typically happen when there is no reason. It happens when no one's really looking. That's what happened on this last drop, really. It's not when people expect it. It's when people are looking away. I mean, this one was like the Fed amounts, the CPI, BS, whatever. Yeah, this is the technically this is the hidden amigo. We've drawn him a couple times, but it never saved. Am I long on oil? No. I still think I have a little bit long on oil. Let's take a look. Whoops. Nah, when we printed this pattern here, it was tough to sell, but it was kind of a forced induction. Would have been nice to have oil go higher, but we took what we got. It was a nice 2-year play. ETH stakes locked up till 2024. Never liked locking my shit up. That's why I never liked that. I never liked locking my money in for no matter what type of interest rate. All that interest rate stuff. Big no-no. Yes, my bot's still running. Growing a lot with crypto, I hear you, bro. Haven't we all? No, I don't stake anything. Only steak is the steaks I eat. Again, the weekly Dixie. Strongest money flow in 40 years. In 40 years. Last time it reached this level was 40 years ago in 1981. 1981. Natural gas been kicking ass. I haven't checked on it in a while. Let's take a look. Bada bing, bada boom. Taking a little hit recently. Natural gas should be alright though. There's like bigger contracts right now with natural gas than oil that I know. But isn't Putin shutting shit down? Yep. 40 years. No, I'm not in a trade. I was looking to get in a short, but I just didn't. I just woke up, looked at the chart. I was like, ooh, I might want to short this, pop off a stream. But it dropped. What happened? Yeah, this was an obvious play. The whole merge thing, obvious play. Is my stream having a problem? My stream having a problem? Said it was loading. Anyways, yeah, the ETH merge drop was an obvious play. Yeah, I'm pretty sure YouTube's gonna copyright rain. So we won't even be able to have the window open outside. Deep fall. Money flow hasn't even gone deep. A lot of pain left. Now there was 2 yellow X's here, but that bottomed out. That was a different time. That's my excuse there. Might as well get rid of a lot of these. Not like these are going to come into fruition anytime soon. This is a beautiful channel, though. I will say, if I must say myself. Beautiful channel. Next channel. How much lower does it have to go? Another 20%. Yeah, my guess is, and even if it don't break through now, eventually when it does, it'll play around in here. Beautiful indications here. How long have I been doing this? What, 6, 7 years? Why do I like Hike and Ashi candles? I like both candles, but Hike and Ashis were created by the same ancestral Japanese bloodline that created standard candles. And they prefer Hike and Ashis. But again, we use both. But it's an average look. It's much easier on the eyes, less chaotic, easier to identify trends. I would say that was my first breakthrough in trading, was identifying the Hike and Ashi and learning the Hike and Ashi. God bless you. Yeah, filters out the noise. That's a good way to put it. But standard candles can give you a peep. Renko, no, I was never, no, I can't really, I never really got into that. Dividing borons by 5.3, it gives you 65k last top. It gives your 65k last top. Well, I said 64. And what do you divide it? What are you dividing? What do you mean by that, duper? Ribbon, what ribbon do I use? I think it's ribbon 5. Ribbon 5. This bear market shorting is easier. I could certainly see that. I have not been as active this bear market, though, as the previous one. Still bullish on Beanie Babies, you bet your ass. Some other stupid YouTuber came up with that 5.3 bullcrap. Yo, how about that pi cycle bullshit? What about the pi cycle shit? Didn't it say this was the bottom? What about this pi cycle? I guess that pi has been denied. Made a killer beef stew, yummy. You've been short and nice, not gonna lie, good for you. The 5.3 crypto crew. Oh yeah, man. How about the rainbow? I think the rainbow is gonna get broken through. Rainbow's gonna get ugly and hijacked like it has in the real life. We prefer a simpler method. The 3 amigos, the 4 horsemen of Bitcoin. Man, this is looking ugly. My gosh, this could. Oh man, there could be a real one. There could be a real one coming. There could be a real one coming. Massive Head and Shoulders on the daily. Let's take a look. Is that what we highlighted already? You talking about this? Head and Shoulders are gay anyways. But yeah, you're probably right. Yeah, you're probably right. Let's measure. Let's take a little measuring stick. Minus 66. Damn, one off 666. Let's fucking shit out of here. What about the W pattern bottom? Man, that's all bullshit. Man, forget everything you learned. We're in the Twilight Zone. This is the Twilight Zone. Anyone hiring? Flip me a burger. Man, come on down to the Crypto Face Pad. You can flip me burgers every day. I'll eat that shit. I've done the pizza, man. Pizza, cheeseburgers. That's pretty much all I need. I've done the 30-day pizza challenge for breakfast, lunch, and dinner before for a full month. Pizza only. Breakfast pizza, lunch pizza, dinner pizza. One of the best. I mean, it was a great month of my life. Man, I need dishwashers in this bitch too, bro. You got the job. You got the job, bro. Not full of junk. It absolutely... Listen, there's Domino's shitter pizza, and then there's good-ass pizza with good ingredients. It's all about the ingredients. You got McDonald's cheeseburgers, or you can have, you know, YU burgers or whatever. So you can't tell me just because it's pizza that it's junk. Like there's levels to that shit. I'm sorry, McDonald's makes a decent cheeseburger if you want it, you know. A laundryman. I absolutely need a laundryman. Waiting for a long? No. No, if anything, I'm as far as my own trades, I got the bots have been flipped on doing their thing, but man, I literally woke up moments before this move. I was like, man, I might want to get in on this, but it's too late. We'll see what the week shows us. What's going on with old Campbell's Chunky Soup? Who owns Campbell's Chunky Soup? Let's see here. CHG. That can't be right. CPB. Hey, there we go. Let's take a look at Campbell's Chicken Soup, baby. Let's go. Chunky Soup might be our way out. Chunky Soup. It doesn't look as bad as everything else. Chunky Soup. I'm good, Fatarix. How you doing, bro? 2-minute noodles. Yeah. What is a good noodle? What's the biggest shithead corporation that makes those Mouchin noodles? Those bastards. Man, my dad told me one time he saw one of those trucks unloading. And basically what they do is they mix their quote-unquote noodle while they're in the truck. Like it shoots out this paste from the fucking like semi-truck. There's like one full of water and one from of the noodle powder. And they basically combine them and it just shoots out this big noodle tube. Here, let's see here. Biggest noodle corporation. Nestle, come on, man. What are those noodles called? Maruchan. Okay, yeah. Who? Maruchan stuff. Toyo Soisan Kaisha. ADR representing OTC mod. T-Suki. Oh my god, it's off the charts. T-Suki, wouldn't you know it? Gas prices have come down. It makes sense for it to maybe come back down again. I would look for this to bottom out. Get right back into T-Suki. General Mills. You know what else has been in a long uptrend is Coca-Cola. Coca-Cola, man, I was talking to these fucking Wells Fargo guys. And KO. Look at that uptrend. Coca-Cola. Man, that is a brand worth investing in. No matter how bad shit gets, you know. You know, these Wells Fargo guys were giving me a pretty good pitch, man, on one of their... now, I bank with numerous folks. Wells Fargo is one of them. And, you know, I'm cool with, like, the managers, you know, at a couple branches and stuff. And one of them was like, you know, you ever, you know. And I was like, yeah, sure, man, let's set up a meeting. And, you know, their pitch was the whole dividend thing. And I didn't give them any money. I was like, you know, the guys at Chase Bank, my dad gave them, you know, a few dollars, and they just whacked it right into tech stocks, and that shit went right down to hell. So I'm like, is that what you guys are gonna do? If I give you a 200 grand or $500,000, are you just gonna smack it right into Facebook and fuck me? Is that what you're gonna do? And you know what they said? They said yes, pretty much 25% of it, yeah. And they said, I'll tell you why. Because right now, their outlook, at least these guys, is they want to invest in companies that are paying dividends. Because as shit gets bad, the dividends go up. And if you include your dividends in with your returns, you know, they can do pretty well. Which makes sense. But I told myself, I don't want any money. If I give you guys money, I don't want any in Facebooks. I think they're kind of on the down and down. Anyone who's really into this whole metaverse thing, I think it's a big mistake. But I kind of like their outlook, and I was looking at their portfolio and shit, and what they were, you know, thinking about doing. And Target was another one they were in that I didn't like. I didn't like Target, you know. So their kind of theories is, hardcore dividends, companies that are going to be increasing dividends as the shit is hitting the fan. And as of now, I haven't given them any money because I just think shit's just hitting the fan too hard. I'm like, sorry, bro. I don't want to give you guys, even if it's $500,000, I don't want to give you $500,000, then have it go to 250 grand, even though it's really not that big of a deal. I've lost 250 grand in 3 hours, and it doesn't really fucking matter before. Y'all have seen it. But I like that Coca-Cola. I like this Coca-Cola play. And in fact, let me find the booklet, man. I actually have their little booklet with all their little plays. I should try to find that real quick so maybe we can read it together. Maybe we can read it together. Give me 1 second. I'll be right back. Yeah, let me try to find it. We can read Wells Fargo's top percentage assholes and what they're thinking. Hang on, I'll be right back. Okay, wow, miracles do happen. I was about to come back and say that I'm sorry I can't find it under a mountain of mail, but I believe I have found it. Okay, so if I gave these guys $500,000, this is what they would do. So weight percentage, 1.5% would be in Comcast Corporation for Communication Services. 9.6% would be under the consumer discretionary sector, which is Lowe's, McDonald's, baby. I like seeing that. Nike, Target. And these are actually, let me give you the percent. They put 3.8% into Lowe's, which I don't know how I feel about that. I love Jimmy Johnson. I'm not big on Lowe's. I think they're overpriced. I think Home Depot does a better job, but I love Jimmy Johnson. May he retire in peace. Jimmy Johnson, Jeff Gordon, shout out. McDonald's, 1.7%. You can't argue that. What's going on with McDonald's? McDonald's. Yeah, these guys are wanting me to buy the fucking top. Okay, McDonald's 1.7, Nike 1.5%, Target 1.7%. I told them if I give you any money, I don't want Target. Let's take a look at Target. Target looks like shit, probably. Oh yeah, let me give you that. Let me do that. Let me do that. Yeah. Yeah, no Target. I don't think Target's invincible. They've been on the down for a long time. Overpriced. Their last good product was live, laugh, love signs for your average basic bitch. 1.10%. Next is VF Corporation, VFC. I don't know who that is, and that ends it for consumer discretionaries. The next allocation is under consumer staples for 8.9%. Includes Clorox Company, Colgate, Palmolive Company, Costco Wholesale Corporation, PepsiCo, Procter & Gamble, and Walmart. Let's take a look at some of these. What's Pepsi doing? We know Coke's doing good. Pepsi looking good like Coke, probably a little more volatile. Let's compare the two side by side. June 2015. $36.60, 102, 169. Looks like overall better returns on Coca-Cola, which makes sense. But I like Pepsi. I like Pepsi and Coke. Procter & Gamble, boring as fuck. We're not gonna look. Walmart, boring as fuck. Next sector is with. By the way, this was an 8.9 allocation into consumer staples. Next sector was energy. The energy sector, which I believe is the sector I'd probably want to fuck with only a 3.2% allocation. This is coming out of some Wells Fargo assholes. Not official. This is not official discretionary. These are just a couple of guys at Wells Fargo that claim they're in the top percentage. I questioned him a little bit on it. And there was three of them go over this shit. Chevron Corporation, 1.2%. Phillips, 66. PSX. What the fuck is that? I don't know who Phillips 66 is. But a higher allocation than them, than Chevron, apparently. Chevron. There you go. Okay, weird. That's a good choice. I like that. Small allocation energy. I would like them to maybe up the weight in energy a little bit. Next allocation, financials with a 10.2%. We got Aflac Incorporated coming out at 2% of total distribution. Let's take a look at Aflac. We don't really see their commercials much anymore. Aflac. Tesla, no. I definitely don't believe Tesla is on their list. Tesla doesn't pay dividends. BlackRock, 2%. Can't go wrong with that, baby. BlackRock under financials, 2%. BLK, these racist pricks. Of course, it's basically at 666. Chubb Limited at 2.4%. One of the heavier, almost up there with JP Morgan Chase coming in at 2.6%. JP Morgan Chase. I wonder why, are they not allowed to invest in their own selves? US Bank Corp at 1.3%. How's my buddy Jamie Dimon doing? I'm a big fan. Everything looks the fucking same. All these financials look the same. This might be a good long right now, for sure. Bank stocks. I might have to long JP Morgan. We might have to long Chubb Limited. CB. We're not gonna long Chubb Limited. We're backing out of Chubb Limited. We'll fuck with BlackRock maybe. JP Morgan looks the best. US Bank Corp, USB. Pretty much all look the same. JP Morgan looked the best out of them. Again, that's financials with a total of 10.2 allocation. Next up is healthcare sector. The healthcare sector. I would like a good heavy allocation. These guys have it at 14.9%. Amgen. Man, that's a company I remember my father. Man, I remember seeing Amgen when I was just a little boy. Seeing Amgen. Never know what the fuck they did. But that's an old man stock right there. Amgen, let's take a look. Allocation at 2.4%. Let's take a look. Amgen, nice. These guys pay dividends overall, have gone up. This has been a great stock if you're an old fucker and you've been in Amgen. Great returns, plus dividends. Abbott Laboratories, 2.7%, even a higher allocation. Let's take a look at that. On a little descent right now. Again, all of these fuckers pay dividends. All of them pay dividends, and my guess is they'll be increasing those dividends. Let me grab another coffee. I'll be right back. We're having fun here. We're going over the assholes at Wells Fargo, and if any of you three guys are watching, we're all assholes, and I consider you guys friends. And so when I say assholes, it's nothing against them. It's just because we're all assholes. And there's nothing official here. Nothing official. This is just a couple guys shooting the shit. And I'll be right back. Okay, I'm back. I like the message of this song. I can relate to it, man. If you see me in person, man, act like you know me, dab it up, be cool, don't be a fucking weirdo. I have all this paper. Let's keep, again, if you're just joining us, the second Yellow X Weekly looking bloody. Looking very bloody. Anyways, let's continue our Wells Fargo assholes and telling me what they want me to invest in. So for to go over again, for $500,000, they'd want to do 1.5% in communication services, aka just Comcast, 9.6% in consumer discretionary, that includes McDonald's, Lowe's, Nike, Target, 8.9% in Clorox and consumer staples and Pepsi and Walmart and Chevron Energy at 3.2%. Financials at 10.2%. We are in the healthcare at 14.9%. Amgen, I liked Amgen. Becton Dickinson and Company. Let's see who they're dicking down. Man, these kind of just have been at a wall, man. I don't know. I don't really... this shit's just probably going to go down. This is probably going to go down. But I don't know. Johnson Johnson at 2.9%. Medtronic, United Healthcare Group. All right, that's all boring. Industrials. Coming in at 12.5%. This would include Emerson Electric Company, General Dynamics, Illinois Tool Works, L3 Harris Technologies, Norfolk and Southern Corporation, Raytheon Technologies, W.W. Grainger. What's W.W. Grainger? Oh! W.W. Grainger. Okay, MDSIP is designed for investors seeking equity income along with the potential for a growing dividend stream and potential long-term capital appreciation. This portfolio focuses on meeting its objective by utilizing dividend-paying equities that are believed to have sustainable dividends, moderate growth potential, and a collective current yield that is higher than the current broad market average. So yeah, I'm not gonna lie. I'm kind of liking their dividend pitch. But I don't really like buying the tops of shit. There'd have to be a lot of dividends to make up for the shit. And the money printer stopped. It's hard for me to give these guys money right now. Next, information technology. Here's all the tech company bullshit. Let's see what they... Oh, Facebook's not on here. Facebook doesn't pay dividends. Wait a second. I don't think Facebook pays dividends. Okay, so we got Accenture, Analog, Apple at 5.3%. These guys want me to do 5.3 into Apple. Yeah, these are the top 10. They're in the top 10% of the Wells Fargo dudes. That I do know. The younger guy tried saying, he was like, we're top 1%. I said, excuse me? I said, excuse me. I said, do you hear what you just said, bro? You just said you're in the top 1%. And the two other dudes kind of chuckled, and they're like, young blood, man, you work for Wells Fargo. You can't just be saying numbers out your ass. Don't fucking tell me you're in the top 1%, motherfucker, unless you got the proof. And then they basically showed me the proof that they're in the top 10%. But don't tell me you're in the top 1% of Wells Fargo. That pissed me off. That might be the reason I don't give them money, just to teach that young man a lesson. Okay, so Apple at 5.3%. Cisco, another old man company. Cisco does a lot of things. Always like that company. We used to order a lot of shit for them. Let's look at Cisco. Another toppy, but that is a company I would look at there. I like Cisco. Bigger allocation into Microsoft, 7.9%. They want me 7.9% weighted into Bill Gates. Can't argue with that. You can't argue with that. This is on the beginning of a descent, though. There's no way I'd want to put any money into this. They'd really have to increase those dividends. I don't think that makes sense. So, no on Microsoft. No on Apple. No thank you. Cisco, I'll take it. Paychecks Incorporated. PayX 2.3%. I wonder if these guys are fucking people on payday loans. This is probably a stock you want to own. Yeah, any of these financial or IT finance guys that are doing check cashing scams on the hood, you probably want a piece of that. Automatic data processing, ADP 2.5%. ADP 2.5%. Not bad. Okay, so again, that's a 24.5%. That's the biggest allocation, 1/4 allocation. Next up is materials at 4.7%. First one is air products and chemicals, APD. So these guys are probably spraying shit in the clouds. And they're off the charts. They're off the charts. Chemicals are kind of fucked right now, man, because it's all Chinese. Chinese have been squeezing our supply chain. This makes sense. This makes sense how it's not looking that good. I don't know if I really like this air products and chemicals. Let's take a look, see here next. Real estate, they got me at 1.4 allocation. Again, these are three assholes in the top 10% at Wells Fargo pitching me on a managed dividend portfolio. They got us in 1.5% communication services, which is basically Comcast or any internet company. 9.6% into consumer discretionary. That's McDonald's. They got Nike. They got Target. They got Lowe's. I'll take McDonald's. We'll take Nike. Dump the rest. Consumer staples at 8.9%. That's Clorox. That's Colgate. That's Costco. That's Pepsi. That's Procter & Gamble. That's Walmart. We'll take everything but Walmart. Fuck Walmart. Energy, they got us in at 3.2%. Chevron and Phillips 66. We'll take Chevron. We'll fuck with Phillips 66. Financials at 10.2%. Aflac. Well, I'm dumping Aflac. I'm telling them no on Aflac. I don't see their commercials anymore. Never really liked them. BlackRock will take them. Chubb, Buddy Chubb Limited, CB 2.5%. We're dumping them. JP Morgan Chase, we're pumping them. Loving JP Morgan Chase. USB, US Bancorp, who gives a fuck? Healthcare Industries. Amgen, 2.4%. Amgen was doing terrific. We love Amgen. Who's Lind PLC? This is in materials. Looks like everything else. Hard for me to give these guys money at the top. I don't care what kind of dividends. This is a dividend strategy. Their pitch, if you're just joining us, these guys are in the top 10% performers in Wells Fargo, as they're buying stocks and companies that pay dividends. And as this shit hits the fan more, we can assume that these companies will pay a higher dividend yield. But even as I would view all of this as a loss over the next couple of years unless something drastically changes, it's hard for me to give these guys money and take them seriously that they're actually going to make me something back. In real estate, American Tower Corporation, AMT. Who's that? Man, stocks are so fucking boring. They all look the same. Boring as fuck. Does anybody know anything about American Tower Corporation? I do like the name. Reminds me of kind of the ivory tower shit, which is where you want to be. Do you want to be in the hood or do you want to be in the tower? I want to be in the tower. You got shilled American Tower in 2019 and it's still sideways. That's funny. It's a great name. I actually love that name, American Tower. I want to start, maybe we should start using tower, the word tower, more in our businesses. American Tower Corporation. For real estate, again, total 1.4% allocation. That's the only real estate company that Wells Fargo schmucks are in. Moving on, we have two more sectors. Utilities at 6.3%. My guess is I'd want an increased allocation to utilities. The hood is getting fucked by energy. Going to continue to be. I imagine those prices would go up. First one is Eversource Energy. ES. Everything looks the same. Wow, look at this volatility in February 2020 before the election. What the fuck? Talk about sideways ass shit right here. Now, even though this has been sideways, you've been getting paid dividends. If you were holding these dudes. This is February 2020. Today is October 2022, September. It's been 2 years. So your stock price might pretty much be the same, but whatever dividend you've been receiving has been profit. I like the dividend. Next Era Energy with a 2.9% total allocation. Ich, ni, sun, she. What's up, my boy? There's our boy Platinum Mike Perry. Let's go! What's up, Mike? If that is him. I'm pretty sure that is him. What's up, bro? Good to see you here, man. Hopefully you're enjoying the fuck off stream. We're just kind of fucking around here. We're not in any trades or nothing. We're just bullshitting. I went to Wells Fargo and chatted with some of these guys, and this is their little portfolio. They wanted me to throw them some cash, and so we're just kind of taking a look at it. They want us to go into a dividend-paying investment, which I see where they're coming from. And you know, when they pitch you, man, they stick 3 guys on you. 3 to 1. It's funny how they do that shit. In my sales pitches, I always like just being just me. I might have a bitch with me, a fine ass bitch, but that's pretty much it. I'll bring a fine ass bitch with me to a sales meeting. That's pretty much it. After that, they have us at cash at 2.3%. What do you know? Yet, when we look at all of these companies, the only thing that looks good, better than all the others. Yeah, I'll make Mike Perry a fucking moderator. Boom. Platinum Mike Perry, you're a moderator of our channel now, so if anyone's being gay, you can ban them. They are not in gold. Gold does not pay dividends, brother. This is a dividend portfolio. Now cash, looking at the Dixie. The money flow has not been this strong in 40 years since 1981. 1981. In 40 years. Last time the value of cash went up 50% when we had these levels. My money's in cash. My money's in cash. Not in crypto. I'm not looking for new real estate deals. Even with all the inflation bullshit as bad as it is. Really, the name of the game is to generate cash flow. But last time this shit happened, the value of cash went up 50%. But you want to spread it around. Risk, here's their disclosure. Risk considerations. Equity investments are subject to market risk, which means their value may fluctuate in response to general economic and market conditions. The prospects of individual companies and industry sectors. There is no guarantee that dividend-paying stocks will return more than the overall stock market. Dividends are not guaranteed and are subject to change or elimination. All investing involved. Yeah, okay. Fuck the disclosure. We don't want to read this. Oh, here's what I wanted to read. Here's portfolio performance and attributions. Contributors: Amgen, L3 Harris detectors, Target. I was right about Target. Both sectors allocation, individual stock selection contributed to performance. Okay, so this is a performance overview of this portfolio that we just went over for the past year, June up to June, since June 30th of 2022. So this year. So this is good. This is their report. There's no way I'm gonna read all this shit. Yeah, actually, let's read this. This is fun. This is fun. Okay, so they go over each sector and their report of each thing. Okay, so an overweight allocation to utilities. Okay, here we go. Okay, so we're gonna start from the top. Both sector allocation and individual stock selection contributed to performance. They were up 11%, or some shit, I think is what he said. Underweight positions in the communication services and consumer discretionary sectors helped, as both sectors underperformed the market. So communication services, aka Comcast, underperformed. An overweight allocation to utilities also contributed. Utilities did well, outperforming the benchmark S&P 500 index for the fourth consecutive quarter. They dicked them down. The challenging market environment led investors to avoid higher risk stocks in favor of a more defensive value in quality names. Individual stock selection contributed broadly to performance as well. Holdings in the healthcare sector stood out for their contribution to performance, namely Amgen. What did I tell you? United Healthcare Group, Johnson & Johnson were the top three in the healthcare. Healthcare stocks tend to perform relatively well in volatile markets, as they fit the market themes of defensiveness, value, and quality. Doctor visits, physicals, booty pokes, all are trends that are improved during quarter as pandemic conditions waned. Drug manufacturers, El Cartel, in particular, seem to benefit from improving healthcare utilization and attractive relative valuation. Amgen reported favorable data on a new cancer medicine, along with quarterly earnings that modestly beat expectations. An attractive relative valuation coming into the year and a positive long-term outlook communicated to investors during the prior quarter may also have contributed to the share outperformance. Amgen. Amgen. Okay, where were we? UNH, United Healthcare, is a large, broadly diverse healthcare provider that has generated strong growth both prior to and through the pandemic thus far. The company posted earning results that beat expectations, and it raised profit guidance for the year. Johnson & Johnson also outperformed the healthcare sector as its large-scale and diversified business mix produced solid quarterly results and a steady outlook going forward. The company has benefited from above-average growth in its pharmaceutical segment in recent years. Its large medical dildo device business has also shown improvement in growth and profitability. There's a lot of hoes out there on the OnlyFans fucking themselves. And its much smaller consumer business appears to have stabilized out of a planned spin-off. Okay, so that was healthcare. Going into consumer discretionary holdings, aka Target, Nike. This was Target, Nike, McDonald's. I can't wait to see what they say about McDonald's. Target, Nike detracted from performance. No shit. Target, which posted abnormally strong growth during the pandemic, reported fiscal first quarter results well below expectations. That's because they're overpriced. Consumers reduced spending on discretionary items amid accelerating price inflation and growing fears of an economic slowdown. No shit. Consumers also continued to shift discretionary spending towards services and away from physical goods. As a result, Target sucks dick! Along with many peers, experienced a sharp increase to unsold inventory, made worse by supply chain disruptions. They couldn't sell shit. They love dick signs couldn't sell, and they were stuck with an inventory of them. This prompted the company to reduce prices on excess inventories, which hurt profit. Elevated supply chain and labor costs also continued to weigh in on profits. Nike. The African sweat houses have been taken over by China. Nike experienced a significant impact on COVID-19 related lockdowns in China, a key growth market. China! Along with the continued impact from Chinese boycotts aimed at many Western brands. This shit is fucking awesome. Supply chain issues and rising costs continue to affect the company across its global footprint. As a result, Nike reduced guidance for sales and profit in the coming fiscal year. The new guidance depends in part on a meaningful improvement in the Chinese demand that may prove to be optimistic. Woo! Nike taking a beating. Okay, what's next? Norfolk Southern. Who's Norfolk Southern? NSC also detracted from performance. Rail volumes remain generally weak. Rail volumes. Okay, so these are labor shortages and supply chain congestion continue to affect consumer price metrics. Revenue per carload has been strong. However, the volume comparisons to years should improve. Okay, so these are railroad. This is railroad shit. This is interesting. These guys are about to get fucked right now, too. Okay, Norfolk Southern. Labor shortages, supply chain congestion, yada yada. We've seen that. Higher fuel costs are typically passed along to customers, albeit with a 30 to 60 day lag. Labor availability could also improve in the second half behind an aggressive hiring and training effort currently underway. NSC remains a core industrial holding given a history of strong dividend growth. 25% increase in dividend payouts for 2022. Wow. And opportunity for continued margin improvement. Yada, yada, yada. Okay. There were several trades initiated during the quarter. We added Costco and W.W. Grainger to the portfolio. Costco operates over 825 membership warehouses worldwide, including over 570 in the United States. The company has increased its dividend for 18 consecutive years and has grown its base dividend at an 13% rate over the last 10 years. The company has increased its dividend for 18 consecutive years and has grown its base dividend at an average 13 rate. Okay, Costco. This, while it's looking weird right now, the market looks like shit right now. This is like a straight reversal diamond right here. But overall, after shit hits the fan, man, I would get in Costco long term because they pay dividends. They pay dividends at an average of a 13% increase every year. They increase their dividend payout. We're in cash right now. We're still in cash, waiting for the shit to hit the fan even more. Okay, where were we? Costco also paid 4 special dividends over the last decade, totaling $29 per share. Wow. $29 per share, more than double the cumulative. Okay. So right now, per share is $500. Okay, whoa. Okay, so what this means is over the past 10 years, there's been an extra special dividend bonus for the sum of $29. Their share price currently is $500, which means that they've paid, what's 29 out of, so let's see, 10% is $50. So in 10 years, they've given you like a 5% return just on a special bonus dividend, not including their rollover dividend. That's pretty cool. So that's a good company. Factors that point to continued dividend growth include a reasonable dividend payout ratio, yada, yada, yada. Okay, who's next? Wow, there's a lot of pages here. This is fun. W.W. Grainger. Fuck them. We don't care. Okay, here we go. This is 3M. Triple M. They sold 3M. We have to hear about this. Okay, first let's pull up the chart. 3M. We know how big and powerful 3M is. They sold. They got out of 3M. Wow, look at that shit hit the fan too. Let's hear why. We sold 3M. 3M's growth has slowed in the recent years, and in our view, management execution has been inconsistent at best. Wow. We have also become increasingly concerned that costs to resolve certain environmental and product liability litigation could be much higher and take much longer to resolve than previously expected. Damn, these boys are throwing fucking shots. These issues could further distract management focus on execution. Triple M has grown its dividend for 64 consecutive years, and its products generally have market leadership positions and high profit margins. Sluggish growth and competition for cash flow related to the litigation issues have brought the dividend growth well below. They're getting sued nonstop. They're getting fucking sued nonstop. They got chemicals out the ass. They're getting fucking sued. That's why these guys don't like cigarette companies. That's why they don't like chemical companies. They get fucking sued. Okay, who's next? I might give these guys this money just so I can get these reports all the time and read them. Yep. Suit on. Okay, here we go. Okay. Who is this? Okay, managed. Okay, so this is their overall portfolio. Managed DSIP2. That's what this shit's called. It's called Managed DSIP2. Managed DSIP2 invests in a select but well-diverse portfolio of companies that we expect will increase their dividends each year. 14 holdings announced dividends increase during the quarter at an average annual rate of 11.56% year-to-date. Year-to-date, 32 holdings announced dividend increases at an average annual rate of 10%. Outlook. Okay, here we go. This is what they think of the future. The year began with world economic facing shortages in many goods categorized to... the world began with world economic facing shortages in many goods categories due to surging demand. Post the COVID-19 peak, coupled with supply chain issues created by the pandemic. We believe here at Wells Fargo, our assholes believe it's safe to say that most investors had not factored a drawn-out ground war in Europe into their outlooks for financial markets of inflation. Ukraine is the breadbasket of Europe. So the war is not only weighing on oil and natural gas prices, but also on food stuff supplies. Given the economic setup prior to the war, it's not surprising that inflation surged early in the year. Well, no shit. The Allspring Investment Analytics team believes that most likely events to influence investment portfolios today are sustained global inflation and unrest in developing nations caused by shortages of daily necessities. Shit's hitting the fan. They also believe these views are now consensus views. And consensus views usually are well factored into the investor decisions and investment prices. They also believe that the risk of a recession due to a spike in energy prices rising into China. Although they see that risk for this year in 2023 as less than 25%. Well, I don't know about that, boys. Shit might hit the fan a little harder than that. As the date of their report, we think other factors that could play into a recession scenario could come from central bank actions. Let me repeat that. We think other factors that could play into a recession scenario could come from central bank actions. Higher rates could put strains on elevated debt levels, particularly with China. These niggas know about China, man. I like these guys. I like these guys more and more I read their reports. They're aware of the Chinese shit. China, particularly in China, leading to defaults. Hold up. Hold up. Hold up. We think factors that can play to central bank. Higher rates could put strains on elevated debt levels, particularly in China, leading to defaults with some impact on broader global markets. Stable coins and cryptocurrencies are under stress. Whether these stresses will have significant impacts on other corners and more transparent areas, the financial markets is unclear. While there are reasons to be cautious, we think there are also reasons to avoid exaggerating the risks of extrapolating them into certainties. I don't know what the fuck they're trying to say. Consensus estimates are calling for a slowing economy going into next year, but no recession. Bloomberg's analysis of consensus estimates and the other factors assess the risk of a recession at 33%. They have a 33%. That's okay. Okay. That's pretty big for them to say 33% chance for a recession. And we're approximately 1 in 3. This seems reasonable to us based on what we know right now. Energy prices have not spiked again following the early year run-up, and TIPS break-even rates have declined. Treasury yields have not inverted, a situation in which rates on shorter-term securities clearly exceed those on longer dates issued, often viewed as a signal that a recession is intimate, up my ass, up your ass. On June 23rd, the Fed announced the results of an annual stress test on banks, which they fucking failed. Indicates the capital levels would remain strong in the face of a severe global recession, and we lied. Unlike the 2008 global financial crisis, in which undercapitalized banks were at the heart of the problem, today's U.S. banks do not appear at risk for adding financial strength. Yeah, we don't have $100 bills in the fucking ATMs. We can reasonably reframe an estimated 1 in 3 chance of recession as a 2 in 3 chance of avoiding the recession. Shut the fuck up. We would also point out the broad U.S. equity market is already minus 20% below where current equity prices. The Offspring mid-year report highlights current bearish sentiment. A pause in the Fed efforts to clamp down on inflation if economic pain becomes acute or detente between Russia and Ukraine. They're talking out of their ass now. In the mid-year report also emphasizes the active user-run selection focused on quality investments may help investors in an environment where the ground appears to be shifting. Our approach offers investors opportunity to invest in companies that could be yada, 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 and that's the end of their sales pitch. What article was that? That was not an article. That was a report from the my Wells Fargo guys that they wrote. Very well done. That was fun. That was fun. Yeah, so that's that was good. Definitely extremely well written. Very well written. So I think I'll throw these guys a little cash and just be like, just send me those fucking reports every month so I can read them to my people. So they were pretty much on point. They were on point. And they're saying 1/3, 33% chance to go into recession. We're already in a recession. And I mean, you know, what defines that? We're already in the pain. Sugar is up 30%. How many products use sugar? Their base, you know, thing. How many products use sugar? %, as of now. So the average, just the price off that, of the main ingredient in so much shit, is 23%. I'm just going off of November. I'm going off of the election. I'm going off of election night, when the presidents and the leadership changed. Now, interesting enough, the money flow has been decreasing. It's actually been I don't know, we might see a little bit of relief. Peace, bro. Yeah, this coffee's got a lot of sugar. I'm jazzed. Jazzed up. We're gonna have to make this a quarterly thing. The crypto face portfolio report. I wish there was more to read. We skipped some of it. We skipped the W.W. Granger. All right, folks. The climax was had. And, yeah, I just wanted to stream a little bit. Didn't enter a trade. Was looking to maybe get in as soon as I woke up. Grazed at the charts. Looked like it was going to dump a little bit. And, I mean, it just happened moments later. So, right now, nothing. It's ugly out there. It's ugly out there. American Tower. Dividend rate. $5.72. How much is it per share? $245. All right. Almost $6. $5.72. What's $5.72 at 245? Hold up. Oh, wait, that's 42. What is that, 2%? Oh, wait. 245 divided by 100 is 245 times 2.5. That puts your rate about there. So they're paying about 2%. They're paying about 2% in dividends per year. An increase from 12.6% of the previous year. W.W. Granger is paying $6.88. Wow, $526 a share, almost $7, almost $7. It's okay, so a little over 1%. So these guys are paying 1-2% in dividends. So all right, folks, GG, fun stream. I'm looking forward to the next time. I say I'll give these guys money, so I'm just going to tell them to send me these fucking reports. Have a good night. God bless you. Peace.